Hello guys, it's Robbie here and welcome in this new backtesting video where I'm going to backtest July 19th Euro USD London session. And as you can see, here are the news for the session. So as we already know that, we have to check the news before every single session, before every single London and New York session. As you can see, we do not have any high impact news during London session, so it will be safe to trade. Let's take a look on the 4-hour time frame and we can start the analysis on the 4-hour time frame. Well, actually, we can start the analysis on daily time frame. So let's take a look on the daily. What happened on the daily time frame? On the daily time frame, we can identify a swing breakout structure here to the upside. This whole swing breakout structure has started from this extreme area, and after this extreme area mitigation, price has finally broke structure on the daily time frame once again. So a daily swing breakout structure happened right here, which has technically happened directly from this daily zone, and we can identify another one right here. And based on this daily time frame, we can definitely expect the continuation of the daily daily bullish trend, but also we have a chance to see a pullback to the downside after this swing breakout structure. So after this daily swing breakout structure, we might be able to see a pullback. So as you can see, after every swing breakout structure, price has made a pullback to the downside. And after this daily swing breakout structure, we can also expect that pullback to the downside. So probably on the 15-minute time frame, we will be able to take shorts down to these valuable demand areas. But let's take a look on the 4-hour time frame. What can we identify in the 4-hour time frame? Well, technically, let me put the screen into a full screen. There was the daily swing breakout structure. This daily swing breakout structure directly happened from this area on the 4-hour time frame. So we can use this daily zone as this 4-hour zone. This is not the perfect refinement of the daily zone. However, we can use this 4-hour zone as a zone which has initiated the daily swing breakout structure to the upside directly. Also, there was a 4-hour swing breakout structure instead of a daily movement. So this is how a daily movement looks like, as you can see right here. And between this daily high and daily low point, 4-hour time frame has made its own swing breakout structure at this point, which technically happened from this 4-hour area. And this is the daily zone, which has initiated this whole daily movement to the upside right here. So yeah, but we can also mark this 4-hour zone out, but it's currently a little bit far away from the current price action region. And also we can identify another 4-hour demand area, which is not a really valuable demand area. However, it has caused a really nice inefficient push to the upside at this point after a little struggle in the market. As you can see, technically this is the pullback, and after that price has made a new high, but it's not that valuable demand because it did not made that much of a pullback, that much of a bearish movement to the downside as it happened here or here. So technically this is just a whole movement to the upside, but this week has initiated a volume push to the upside. So we can expect a reaction on this demand area, or we can expect a flip on it. If the flip happens, we can execute sales down to this 4-hour demand area. However, if price confirms it on the 15-minute time frame, this 4-hour demand area, this 4-hour weak area, then we can execute longs and we can expect the new breakout structure to the upside. So yeah, technically that's all based on the 4-hour time frame. Also, what can we identify at this point? Technically, we have literally perfect double bottoms, which has been technically built up for this 4-hour demand. However, probably we will be able to find 15-minute areas in this movement. And let me take a look at this price action region. Maybe there was a 4-hour area. Technically, there was a 4-hour supply area, and probably this supply has been flipped on the 15-minute time frame with the current movement. All right, there is a 4-hour supply. Okay, this is where the 4-hour supply has been mitigated. Let me take a look on it once again. Yeah, technically this supply has caused a break of structure here to the downside on the 4-hour time frame. Also, there was a supply area which was the origin of this whole movement. yeah, I will stick to this supply area. So probably we will be able to find a 15-minute supply, 15-minute demand area somewhere around at this point right here. So technically that's all based on the 4-hour time frame. Also, one more thing that we can identify at this point, price action has really slowed down. So the full price action at this point, it's completely efficient. So we can probably expect a pullback down to this demand area. We can definitely expect the sweep of this liquidity. So we will be able to execute sales probably based on the 15-minute time frame. But currently at this point, the 4-hour time frame is still bullish. Nothing really has changed. So yeah, let's take a look on the 15-minute time frame. I had to play price forward a little bit. And here we are on the 15-minute time frame. What can we identify at this point? Well, as you can see, technically there is a 15-minute demand which has caused a really nice breakout structure to the upside. And this zone is still unmitigated. As you can see, price did not mitigate this zone. But just a moment. All right. So there is this 15-minute demand area. Price has swept its perfect double bottoms, but couldn't really manage to mitigate any demand at this point. So technically this low will function as liquidity for the future shorts down to this 15-minute demand, because it's a middle of nowhere reversal, and every middle of nowhere reversal will function as liquidity for future movement. Also, what can we identify right here? Well, technically 15-minute has changed character at this point. Let me take a look on the 4-hour time frame. Maybe price was reacted on something at this point. Technically, no, it did not. Or actually, no, there wasn't any valuable mitigation, but it still started to form bearish order flow on the 15-minute time frame, started from this point. So 15-minute has changed character, made a new breakout structure to the downside, and made a breakout structure at this point, which happened perfectly from this supply area. So let me mark this supply area right here. And as you can see, price has mitigated the low percentage of it. But this low percentage has swept the double tops liquidity just below the 15-minute supply area. And after this small percent mitigation, price has made a new breakout structure to the downside, which has been reversed after middle of nowhere reversal. And price technically left behind a newly formed 15-minute supply area right here. Technically, from the breakout structure has happened from this 15-minute candle directly, but I would mark out a 5-minute supply area at this region. This is our valuable 15-minute supply, which has initiated this whole structure breaking movement. Even though the liquidity has been swept from this region, this low could function as liquidity because it's a middle of nowhere reversal. So if price reverses back to this supply area, I would wait for confirmation entry, targeting this 15-minute demand or this low point. If this 15-minute supply, so if this 15-minute supply cannot give us reactions, I would still wait for a deeper mitigation on the higher supply, because it has a chance to be a sell trap for this 15-minute supply. After deeper mitigation, if price changes character on the 1-minute time frame, gives us confirmations, I would execute sales targeting this 15-minute demand area or this low point. However, if price flips this supply right here, then I would execute longs and target this high point up here. And if the flip scenario happens, I would expect the continuation of this whole 4-hour daily bullish trend to the upside. However, if price mitigates the 15-minute demand, well, technically we can wait for a 1-minute change of character targeting supply areas, for example, this one, or we can hold it up to this high point right here. Or if the change of character, if the confirmations cannot happen on this 15-minute demand area, then I would wait for sales. And if a sell and if a flip of this demand happens, then I would probably target this 4-hour wick area, because everything just below this demand is efficient, as you can see, and this is the only inefficient area on the 4-hour time frame. But we can identify a 15-minute candle right here, which still has inefficiency right here. So these are the plans that I would follow in this session, and I'm on the short side of the market at this point. I'm expecting a pullback to the downside to some valuable further demand areas. And yeah, technically that's all based on the 15-minute time frame. Let's take a look on the 5-minute time frame, but probably we can identify a 5-minute supply somewhere around here. All right. Technically, price is reacting on this 5-minute supply currently, but probably this 5-minute supply did not have any liquidity, so it will create liquidity for the higher supply area, and after this higher supply area, probably the confirmation entry can happen, but we will see. And nothing as on the 5-minute time frame. I believe there wasn't any 5-minute demand mitigation either. Let me find the lowest point. Okay, this is the lowest point. Technically, no, there wasn't any valuable demand mitigation. This is the 5-minute refinement of the 15-minute demand, but even the 15-minute demand is still unmitigated. Price couldn't really manage to mitigate it. So it's a completely clear middle of nowhere reversal on the 5-minute and 15-minute time frame. So this low point is just pure liquidity for our shorts. So yeah, that's all based on the pre-market analysis, and let's play price forward and let's see what happens in this session. Perfect. So let's play price forward. As you can see, price has already flipped the supply, the 5-minute supply that has caused the breakout structure directly, and already mitigated the 15-minute supply area. But what can we identify at this point? This is a slow person mitigation, small person mitigation. Price is struggling inside of it a bit. Yeah, it's still struggling. But this is a really nice reaction right here. This is a really nice volume push that I'm really looking for. And if we can take a look at this point, price has swept some liquidity just above the supply area. There was some liquidity after almost a full zone mitigation. Price technically created liquidity right here. Printed volume candles, so money has been pumped into the market with this movement right here. After that, price has instantly wigged above on the on this 15-minute supply area. Let me play price forward back a bit. My bad. I don't want to spoiler the whole price action. On the 5-minute time frame, you can see that 5-minute candle closed inside of this zone, and I believe also the 15-minute candle, yeah, closed inside of this zone, swapped the liquidity just above the supply area. And after the reaction on this 1-minute demand, because we had a breakout structure at this point, so this is the last recent breakout structure, this is our last recent low point, last recent demand zone that has caused volume push to the downside. After there was a small struggle, but you can see that technically a flip scenario happened in this case. And we can only identify one valuable area, which is right here. This is the only area that has caused the flip. We cannot identify, actually we can identify a weak area right here, which is our extreme. So technically we have a decision versus extreme scenario at this point, but in this case, the change of character has happened directly from this decision. We can use a risk split entry. This is the best solution that we can use in a decision and versus extreme areas. So we can definitely use a risk split entry here, but let's count the criteria first. The first one is the higher time frame zone mitigation. Second one, liquidity to take. Perfect. Third one, inefficiency. We can identify inefficiency here. We can identify inefficiency here for the extreme area too. And we are in a pro order flow. The pro trend is still bullish based on the daily 4-hour time frame, but we are in a bearish order flow on the 15-minute time frame, so we can count the pro trend criteria. We have a flip in this case with a V-shaped recovery. I would call this one as a V-shaped recovery. So we have V-shaped recovery too. Price has made a really nice V-shaped recovery, V-shaped reaction after the 50% and after the liquidity sweeping movement. So V-shaped recovery is there. There is liquidity target. As I said, this whole low point is just liquidity for the shorts. It's a middle of nowhere reversal, so this will function as liquidity target. We have also 50% mitigation based on this 50-minute supply area. So 50% mitigation is there. I believe there isn't any valuable demand area at this point. No, there is literally no demand. At this point, price has just wigged above, so there is no demand, there is no inefficiency, there is no any valuable opposite-sided zone, so price is not coming from an opposite-sided zone. And technically, 9 criteria is enough. We also have corrective pullbacks from pro movements based on the 1-minute time frame. Look at the bearish movements and compare it to the bullish movements. So yeah, and also if you take a look on the 50-minute time frame, but I do not want to take a look on it, but we can take a look on it if I play price back a bit. All right, so on the 15-minute time frame, you can identify that after the last recent breakout structure, at this point, technically the bearish movements are stronger than the bullish ones. Just look at this bullish pullback up to this supply and look at this reaction on it, which has led the price into new breakout structure. So we have corrective pullbacks from pro movements criteria. For the decisional zone, we do not have liquidity, combined liquidation. However, we have combined liquidation for the extreme area. So we have 10 criteria for the decisional, 11 for the extreme area. Let me write it right here. There is 11 and there is 10 criteria. So a risk split entry could play out pretty well in this situation. So let me delete these drawings first. And let's see what happens if we set a risk split order on the decision and the extreme area. I would probably use, yeah, I would definitely use a risk split entry here. And it's only on the wick. Sorry, bear with me a bit. Probably a 3 pips stop loss can cover the decisional zone. Yeah, it perfectly covers the decisional zone. And the full zone mitigation, full zone entry on the extreme area would cover the whole zone too. So I would be more than satisfied with this solution in this case. So there is 3 pip stop loss using a full zone. And on the decision, we are also using 3 pip stop loss and targeting the low point in this case, or we can target the 50-minute demand instead of the full zone, instead of the lowest point of the liquidity, lowest point or this low point, because this is a middle of nowhere reversal which will function as liquidity. In this case, you can target both areas for, actually you can target this 15-minute demand or you can target this low point. There is not much difference between the low point and the 15-minute demand. There is 11.7 risk reward ratio on the decisional and 13.3 risk reward ratio on the extreme area if we get tagged in at the low point, and there is 12.1 risk reward ratio on the decisional and 13.7 risk reward ratio. So there is a 0.4 risk reward ratio difference on both positions if we are targeting the 15-minute demand or the lowest point of the liquidity. So probably personally I would stick to the lowest point of the liquidity, targeting the lowest point of the liquidity. So yeah, for 11.7 and 13.3 risk reward ratio, we have 10 criteria for the decision, we have 11 criteria for the extreme. So let's see what happens. Let's play price forward. Okay, we got a tag on the decisional area and price reacted on it pretty well. Let's see. I would put my stop loss into break-even if price breaks below this low point. Okay. It happened. So decisional is in break-even. And we probably the extreme area in this case did not cause anything, to be honest. It was just the extreme of this whole movement, but the real movement happened from the decisional area. Probably if price reverses back to this extreme with volume movement, with volume candles, then I would wait for another confirmation entry on it. But if price approaches this zone slowly with efficient candles, then I would keep my order at this point. So let's see what happens. This decision area is already in break even. So there is, it's literally perfect. Okay, I have just, right, just a moment. Sorry. My apologies. Okay, it will be perfectly fine. So yeah, and okay, I had to adapt it, sorry. So let's see what happens. Decision is in break even. And also, I forget to mention one thing. If price can reach probably 5 risk reward ratio or 5.3 risk reward ratio, actually 5.5 risk reward ratio, and also 7.1 risk reward ratio, I would close my 50% of the whole position at this point right here. So this is a partial level 5.5 risk reward ratio slash 7.3 risk reward ratio. Let's see if a partial level can be mitigated or not, if price can manage to tap it or not. All right, let's see what happens. Okay, price started to reverse and the decision has been swept out. And look at these movements right here. Look at these candles right here. This is a pretty strong reversal. So price printed volume candles. So probably I would wait for another confirmation entry on the extreme area because once again, it did not cause anything. It did not cause any significant movement. The significant movement happened from this flip area. And in this case, I would like to see some slow approach up to this extreme or a new confirmation if price approaches it with volume movements. And technically, these are pretty volume candles, price printed inefficient candles. So I would wait for a new confirmation entry. However, there is one more possible scenario. Price created liquidity just below the extreme area. So it has a chance to play out. But let me hide the decisional area first. Perfect. It has a chance to play out. And to be honest, why should I not keep my limit order here? What can I lose in this case? Technically nothing. I can just learn from it. So let's see what happens. Because of this combine liquidation right here, and because of this really nice volume movement, from this point, there has been pumped money into the market, and there is really nice liquidity just below this extreme area. So this extreme area has a really nice chance, really high chance to hold the price. However, it still did not manage to do the significant movement. The significant movement happened from the decision, but because of this combine liquidation, right here, because of this proper liquidity. So at this point, when the flip happened, there wasn't that proper liquidity. For me, this perfect, literally perfect double tops is a proper liquidity that I would count as a proper combine liquidation. So yeah, that's my priority. So this combine liquidation, this perfect, literally perfect combine double tops is enough for me in order to keep my order on the extreme area. But let's see what happens. Okay, mitigation happened perfectly. And we still have 45 minutes left from the session. Let's see what happens. It swept us out in stop loss, but there was a reaction. And as you can see, there was actually we could be out in break even. You know why? Because there was literally perfect double tops which has been created just above our entry POI. So I wasn't paying enough attention to these perfect double tops. So because of these double tops, we have been swept out. Price probably mitigated the 50% of this 15-minute area, the higher 15-minute area, yeah. And we might be able to see another entry opportunity because this is also part of the plan. But once again, I did not pay enough attention to these double tops. And we could close our order here in break even, or we could just let it run into the stop loss hit. But yeah, also we could set our stop loss into break even at this point because of these double taps. So in this case, we would save us from a stop loss hit, but the stop loss from on this extreme area after this liquidity creation is perfectly fine. So it's still a valid setup. So unfortunately, it turned out as a stop loss hit. Let's see what happens. We have a new character changing point after this 15-minute 50% supply zone mitigation, and technically this could be liquidity for the higher supply area right here. So let's see what happens if a change of character happens or not. We still have 30 minutes left from the session. Price reacts on the 1-minute demand, and we can't really identify any volume movement at this point. Yeah, we did not have change of character, and also you can see that technically price reacted on this 1-minute zone, but it wasn't a 1-minute zone for us because it did not cause change of character to the downside. So let's see what happens. Okay, price is just doing substructural movements, and this is a really bad movement that I do not like. There is liquidity on technically both sides on the 1-minute time frame. This is nothing else, just liquidity. Technically, the change of character happened at this point, but I would not call this one as a V-shaped recovery. Price was just hesitating inside of this 15-minute area, and you can see that there is liquidity. There was liquidity which has been swept out, and also technically there is this supply which has initiated this change of character, but this supply is part of the double tops. So probably we would need to wait for another confirmation entry after the sweep, but it won't happen inside of this session. We have 6 minutes left from this session, and actually session has closed right here with this candle. And yeah, technically that's all what happened in this case. We had a break-even hit on the decisional area, and we have a stop loss hit on the extreme area, but the stop loss hit could be a break-even area, but I did not paying enough attention for these double tops just above the extreme area. So yeah, that's all, guys. It was a really nice session in terms of price action. However, the results were missing a bit, but it's perfectly fine. And that's all, guys. I want to wish all of you a nice rest of the weekend, and see you guys tomorrow on Monday, and wish you all a nice week ahead. So yeah, take care. Goodbye.